I'm Nick Grove for Morningstar, and today I'm joined by Director of Manager Research Ratings Tom Whitelaw to discuss the Australian Morningstar Awards. Tom, welcome.
No problem, Nick.
First of all, Tom, before we talk about the manager that took out the top gong, can you just briefly talk us through the methodology that's used to determine the award winners in each category?
Yep, sure. So it's a pretty straightforward process. So you've got to be Australian domiciled fund to start with. You've got to have a Morningstar analyst rating, and you've got to have 3 years of track record to be eligible for an award. And then when we actually get down to picking the managers, it's a mixture of qual and quant. So given the award is over the year, it's an annual award, we look at the performance of the manager over the 1 year. But we don't just look at the 1 year, we extend that out to 3 and 5, and we're also looking at risk-adjusted returns. So we don't just want a manager who has an amazing year and kind of beats everybody, but then the next year they're going to kind of drop off a cliff, or they're also bouncing back from something like that. So we really want that consistency, and that's key, and that's a lot of where the qualitative analysis comes in as well.
Hyperion Asset Management took out the top award of Australian Fund Manager of the Year. What attributes set them apart from the pack?
Yeah, so that consistency is right there to see with Hyperion. So they've been our award winner a couple of times in the last few years. And just the strength that they've got across that Australian equities funds, not only large caps, but also backing it up in smalls. And I think just the way that they pick stocks is very different. So they're benchmark agnostic. They're not really bothered about what the index is holding. And they're very true to form in that they really want strong return on equity, companies with strong return on equities. They're also looking for earnings growth. And they've found those kind of names in spades over the last few years. And you just look at their portfolio and there's names like REA, Seek, Domino's that sit at the top of there. And those have been some of the top performers in the markets. And they build a very concentrated portfolio, so 15 to 30 stocks. Very low turnover approach as well. And they've really done a good job of backing it up year after year after year. So we're looking forward to what they've got in store for 2016 as well.
The Morningstar Awards also features an undiscovered manager category, which this year was taken out by the Carnegie Worldwide Equity Trust. How were they determined to be the winner of this award?
Yeah, I think this is a really interesting category. So given the Morningstar model, it's a user pays model, and we're looking for strategies that we cover that we believe really do have strong investment merit. So they may not currently have a lot of client demand going for them. People aren't necessarily buying the fund, but we think that it's really important to highlight those strategies that we think will fit well in a client's portfolio, and also offer them maybe something different than they've already got, or something that's maybe better than the options that are already available. And all 3 of our candidates this year do that, with Carnegie obviously taking it out, then you've got the T. Rowe Dynamic Bond Fund, and also OC Smaller Companies. But Carnegie really just got there on the strength of the proposition that they bring to this market. Got some very strong portfolio managers based over in Copenhagen, very growth orientated approach, kind of really kicking the tires on a lot of these types of stocks across the world. And we really feel that it's something that investors should know more about. And we're hoping that this kind of award really just gets it on the radar of a few more people.
Tom, thanks for your time today.
Great, thanks a lot, Nick.
I'm Nick Grove for Morningstar. Thanks for watching.